Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be considering the consolidation which has been ongoing in the dollar index for past two trading sessions, and this support in which the dollar index has been trading for past 2 days, the 96.5 level is indeed looking promising, and I think if it is able to hold on to these levels, then we can see a possible retracement from these levels. So that is the possibility which we are trying to exploit in today's session. Of course, our job is to look for the opportunities where the risk is minimum, and the reward, if it comes our way, should be substantial. So we will see how we can profit from this scenario here. And if you consider the trading context, the data which has been moving the market is, of course, the German data, which we got earlier in the day, and here worse than the expectations. The Germany's export, which carry a significant effect on the market sentiments, as most of these exports are high-end industrial products, and here we are witnessing a slump of 31.1% for the month of April, and because of that the Germany's trade surplus has come down. It has narrowed sharply to only euro 3 billion, and that is a lot lower compared to the prior years, the April 2019 figure, when it was more than 17 billion euros, and because of that, fresh concerns are arising regarding the health of world economy, and we are seeing due correction in the most of the major equity indices, starting from the European trading session. But there is some positive data coming in also, and here the magnitude of euro area's GDP contraction has been revised lower to 3.6% in terms of quarter on quarter for the first quarter ended March 2020. The earlier estimate, the first estimate was at 3.8%. So here we have better numbers, but I don't think that's a consolation or anything which can help the market sentiments at the moment. We are seeing some correction, as the markets were pretty much overstretched as well in last 3 to 4 weeks. We have seen substantial movements on the higher side, almost close to 15 percentage point. I'm not precise here, but still 13 to 15% is the move which we have seen happening in most of the major equity indices in euro area as well as the US markets. Now, coming to the technical front, we will cover the dollar index, and then we will move on to the equity index of United States, which carries a significant impact on the trading environment of the world, the S&P 500. So let's start with the dollar index technical outlook first. This is the dollar index chart, and here what a topsy-turvy year it has been for the dollar index. Here we have seen all sort of moves, from bullish runs to bearish runs to sharp revivals on the upside to sharp downturn, and then extended consolidation with very well defined range, and then eventually a break on the lower side, and this crucial zone around 99, which was providing support for more than a month, then eventually give and had to give way, and we had this movement towards the lower side towards 96. But now, as you can notice here, for past three trading sessions, we are seeing that this 96.5 zone is proving to be a good support zone for the dollar index. Of course, we haven't really seen any big uptick on the price action front on the higher side, but still, unless and until there is a fresh break below these prior swing lows established in yesterday's trading session, I think we can try our luck and see if we can profit from this oversold scenario, as we have already seen this extended fall, and the sentiments as well as the price action looks pretty much overstretched, and we have also this consolidation in a place which can be utilized if we are willing to take the risk. As you can notice here, we have this sort of double bottom formation on the lower side on both the counts. As you can notice, the revival, or you can say the positive momentum, the bullish momentum came into the play and push the dollar index higher after making low close to 96.5. So even in today's trading session, we have seen this uptick happening from 96.5 to almost 97, and now again some further correction and eventually consolidation might happen. And during the US trading session hours, we can indeed think about going in for a fresh long position with target coming into play around this first support of this month's pivot point series, which had of course been broken in the first week, but now we have this consolidation, and now the price action has also moved to the upper band of this regression curve, which is still tilted on the downside and pretty sharply, as well as we had this rather one way momentum, the downhill momentum, and that eventually pushed the dollar index to get overstretched. And now here we are seeing some consolidation. That is the key factor to consider. And if there was no consolidation, then we might have needed to think twice. But now that we have some support zone established, I think we can indeed think about trying to exploit this situation to our advantage. And here, as you can notice, this price action channel, the bearish channel, now stands broken to some extent. We don't really have a clear cut break on the upside. I think if we get a break above this 97 zone, which is the 100 SMA area, then that will provide the fresh impetus for the dollar index to propel towards eventually this immediate swing highs. This 200 SMA zone, which is there around 96.5. So on the current levels closer to 96.8 to 96.7, I feel if we can take the risk and keep a stop loss anywhere close to 96.4, that should be good enough. For a risk of around 30 to 40 points, you can indeed target around almost 80 points on the higher side if we are getting involved around 96.8 with a stop loss coming in around 96.4. Then for a risk of around 40 pips, 40 points, we can think about going in for at least 80 to more than 80 points. And on the upper side, we can target a further retest of this 200 SMA, though it is bit higher, but still I think we can indeed be hopeful of that happening, as we have this extended consolidation in place. And unless and until there is a break below those levels, these prior swing low levels, I think we can indeed look for this trade to play out in our favor. Now let's move on to the S&P 500's technical outlook. This is the daily time frame chart, and in yesterday's session only, the S&P 500 erased its losses for the year. So if you go back in time around January 2020, and now if you compare those price levels, you can even omit this drop, and you will be pretty much able to say that nothing significant, nothing that could have roiled the market in such a way have happened. Now we have the benefit of the hindsight, and as some of the traders say that it would have one hell of a ride if you had got this hindsight way back in middle of the March. But now we have what we have, and I think still the momentum is on the bullish side, as we have central banks around the world pumping the money and driving the interest rates lower. So we have this boom in the equity segment, and the valuations are of course inching higher. Now after rallying more, almost 15 percentage point from the consolidation zone closer to 2800, I think new possibilities are emerging for the S&P 500 and other major US equity indices as well, that we might see some correction and consolidation phase. It's not like that we are going to see sharp fall on the downside just yet. We can't really say that, as the momentum and the technical formation is still in the favor of bullish trading environment, and because of that it's a bit difficult to come to a conclusion that the top has been made. So we are not really betting on that, but I think scalping kind of opportunities can be found in this current environment, and that is more likely to be profitable rather than going to long trades or going to big trades. So here we have this first resistance of this month's pivot point series, which was broken just a couple of sessions back, and now the price action has entered into this overbought scenario as well. So here we have a couple of things which can give us some confidence that these are the time actually where we can try to look on the short sell trade on the high side closer to this immediate swing high. But for that we also need some confirmation on the lower side. So this immediate swing low, which was there around 3200, has acted as a near term support in today's trading session. So if we see a clear break below that, and eventually if the price tries to extend toward this first resistance zone, then I think we will be in a better position to make the assessment of going in for a fresh trade on the short sell side closer to these prior swing highs. And also the price action has now moved to the lower band of this regression curve. So here also we have some factors which might act in our favor. But for these sentiments to prevail, and if we are going to see any meaningful turnaround which might push the S&P 500 lower, then in immediate term we will need a break below this swing lows. These are not actually kind of deep corrective lows. Here we had almost this sideways kind of momentum, and then this price action again picked up on the high side and went on to rise almost 1 percentage point from those levels as well. Now as we got worse than expected the trade surplus trade balance data for the Germany, and some couple of factors are also weighing on the equity segment sentiment here. So because of that, after the start of European trading session, we have seen this almost 1 percentage point move on the lower side, and that indicates the possible weakening of this bullish momentum which we have seen in last 3 to 4 weeks. But still, as I said earlier as well, these are the times, you can say, too early to be convincing, and so because of that we might need some more confirmation. And as I said, a confirmation in which we will see the S&P 500 breaking below this immediate support zone and extending towards this 100 SMA area. That would be a welcome development for us, and then we can think about going in for a fresh short sell opportunity closer to these 50 SMA, as and when there will be some retracement after making fresh lows. So that's it from my side for today's webinar session. And if any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while utilizing the information provided. Have a profitable day ahead. See you tomorrow. Goodbye.